Welcome to the Property Voice Podcast, helping you to navigate safely through the world of property investing. Get the lowdown and updates, insights and outcomes on all matters property with a splash of entertainment along the way. The Property Voice, a voice to trust among the crowd. Now, let's get started with your host, Richard Brown.
Hello and welcome to another edition of the Property Voice podcast. My name is Richard Brown and as always it's a pleasure to have you join us in what will be the final episode of Series 1. I'm joined today by Kaza, so hi Kaza, how are you doing today and what have we got coming up?
Hi Richard, I am splendid thanks. A little excited, but also a little sad to be drawing a curtain on the first series today. But it's been a lot of fun. So, in today's show, we have Property Chatter, where Richard will give a quick recap of the main aspects of this first series, building on solid foundations. You will also provide an investor quick start process so people can get going super fast. Then, we have your voice. This week, we have a short but very sweet 5-star listener review. Next, the shout out. We share yet another tool to help us, particularly when we are looking at selling a property. However, there is a twist to that to help potentially in finding some ripe bargains too. Finally, I believe you will be sharing with us what we can look forward to in the second series. I really cannot wait to hear. It's about recycling, I think, isn't it? So, back to you, Richard.
Okay, so let's get on with this week's featured topic with Property Chatter.
Thanks Kaza. Recycling, well, not quite to be fair, but a nice try. Have you been trying to read my notes upside down again? Not quite, let's see, I'm going to keep you in suspense a little while longer. Okay, so for this final episode, what I intend to do is provide an overview of what we've covered in the first series, and then a few suggestions of what we can do next as by way of an investor quick start, if we like. So let's start with that brief recap, shall we? We've actually covered quite a fair amount of ground, and I haven't counted exactly, but I can estimate we've covered well over 30,000 spoken words over the course of this first series. I think that's a dissertation in university language, so that's a fair amount of knowledge transferred, isn't it, or shared between us. So here's a quick summary, needless to say. So yes, strategy. We started off in the first week proper when we looked at property strategy, and of course we were looking at the mnemonic RIGHT, the RIGHT strategy, which of course spelt out the various types of property strategy that we can adopt. Now R was for rental income, I was for investor services, G was for growing the capital, H for handling the property by using other people's money or assets, and T was for trading the properties. So we didn't go too deep because there's quite a lot of individual strategies that were covered there. I think up to 20 were summarized in that first episode. But I do plan to return to this whole issue of property strategy in a future series. So there we go. There's quite a lot of ground there that we can touch on, and we'll go a little bit deeper, as I say, in a future series. Next up, we looked at property as an investment, and we considered some of the investment principles, not just as property, but comparing property with other asset classes, and in particular ISAs and pensions. We looked at the whole risk and reward approach, some aspects of taxation, but I think what we really focus in on, and in particular where property stands out, is the whole notion of leverage and cash-on-cash returns, plus the area of compound growth and inflation and how it can be our friend, in fact. And we started to conclude that episode with a definition of wealth creation, understanding that property can be a wealth creation tool. And my definition was an accumulation of assets, generating a passive income sufficient to fund our lifestyle expenses forever, or in perpetuity if you prefer. And then, of course, we were looking to define our why, what, and how, or our purpose, goals, and strategy, if you prefer. So that was the second episode proper. The third one was criteria and checklists, and two main areas here we covered. One was key performance indicators, or KPIs for short. And I guess, whilst we covered a lot of ground, the headlines boiled down to, as far as I'm concerned at least, to return on investment, net monthly cash flow, or annual cash flow if you prefer, the net equity gain or profit, particularly if you're trading properties, and the payback period on the investment. So they're my key performance indicators. We covered a range of other ones, and you may have your own. Equally, I covered what I describe as the STAR criteria in terms of assessing the fundamentals of an investment property. And STAR stood for schools, or it could be universities, but that doesn't start with an S. So schools, transport links, amenities such as shops, bars and restaurants, that sort of thing. Revenue, which was a bit of a catch-all to cover jobs and inward investment. And the conclusion was to define your own criteria and KPIs to be able to work out what is a good deal as far as you're concerned. Next one was research and due diligence. And, we talked about peeling onions, if you remember, the layers of the onion, and the first layer being a pre-screen against set criteria and KPIs. The second layer of the onion, if you like, if we peel it back, would be a deeper level of desk-based research before entering into the third level, which would be involving other people and potentially a site visit. So we also looked at what areas of the deal we could research, which would include the commercials of the deal, the property itself, the general location and area, and the people that we might engage with to understand that deal. So people who we would partner with in some shape or form. And so it's really, talking about getting good at research and due diligence, and this whole idea potentially, if we don't trust our own gut instincts, or perhaps we're not so experienced, to have what I call a trusted advisor to help us out. Then we're looking at the whole topic of knowledge, who, what, and where. And, two main camps here. First one was people, and that was really a signpost to go to some of the online communities that are out there to meet fellow property investors, to share information and knowledge, but also physically to attend property meetings and network in person. And in terms of knowledge, there was again a number of resources and signposting that took place, whether it be online forums or pointers to industry associations, general, property-related press and other print media. And obviously I can't leave that section behind without looking at books. I'm pretty well now obsessed with books and developing knowledge both in property and in other areas, but that was another point there. But lots of resources were shared in that particular show, and in fact in the book, The Property Investor Toolkit, which is this series is based around, there is both a short and a long reading list, so get your hands on that. It was up to 100 different book titles to work your way through. But the principle being is to get and stay current, to meet fellow investors, and to feed the brain with brain food, rich brain food. The next one we looked at was a two-parts episode, actually, with lettings and management. And if you remember, in this area, it's quite a wide subject, but we also had a couple of subject matter expert contributions who joined us in part 1 and part 2. So in that first part, I did, it was kind of my chart show, if you remember, the top 10 lettings and management best practice tips, the top 5 areas of contention between landlords and tenants, the top 5 costliest mistakes of poor lettings and management practice were my contributions. And then I had the interview with Damien Fogg, who was presenting the case for self-management quite strongly. Finishing, of course, with my own personal take on more of a hands-off investor approach and using letting agents. And then in part 2, I did my too good and too bad landlord and tenant tales. Some good ones and some not so good experiences there to share with you. And of course I had my second subject matter expert contribution, this time from Tim Leffler, who was presenting the case for letting agents and in fact how to identify a good letting agent. The next topic that we looked at was financial and accounting systems. And this is where I shared, if you remember, my illustration was one thing, 2 pebbles and 3 buckets, to try and get over the illustration of how we can potentially categorize different expenditures into the various accounting records that we need to keep. We talked about the difference between CapEx, or capital expenditure, and OpEx, or operating expenditure, and indeed how these can have a bearing on our tax position. And of course, the whole purpose of that was to talk about how maintaining good systems and records. Then we introduced the topic of funding the property investment, and we covered a brief history of buy-to-let finance before looking at some of the major sources of property finance, ranging from cash, friends and family, buy-to-let mortgage obviously, commercial finance, bridging and auction finance, new or disruptive lenders such as the peer-to-peer and crowdfunding crew, private finance including joint ventures, and creative financing strategies. So we had a bit of a deeper dive into the subject with 3 main areas, and perhaps we'll return to that in a future series and cover that off in more detail. But what I'm obviously doing here is giving you pointers that if you missed one of the episodes and you think, oh, that's something I would like to cover, perhaps you can go back and revisit. Then I introduced something that's not in the book, which is the investor mindset. It's not directly in the book anyway. And again, it was a 2-part episode. The first one, I introduced the concept of the investor mindset puzzle. We looked at the skills and competencies, principles, personal qualities and characteristics, and good old habits and routine of what makes a good investor mindset in this investor mindset puzzle. And then in the second part, took a bit of a deeper dive. I took a bit of inspiration from a recent trip to a magical place and took a deeper dive, believe it or not, into habits and routine. And, there's a lot of learning that came out of that. So there was quite a lot on, personal philosophy, motivation, change, and personal growth that was sprinkled across these 2 episodes, of course. So that's a quick, summary, whistle stop again of what we covered over the series. Maybe you remember some of those things as I mentioned them. Maybe you missed the odd episode, and perhaps if I've said something in a headline terms that you'd like to revisit, then by all means do. But that draws a conclusion of where we got to up until the end of last week, and of course now what I'd like to do is talk about where we'd like to head to going forward. Okay, so going forward, I've titled this part of the show the Investor Quick Start, and in fact it's the title for the show, because rather than looking back, we're going to look forward. And I think, I'd like to start with a quotation here, if I may. And it's one of my favorite quotations. It's definitely in my Vision Board Pro, which is the resource I shared with you last week, if you remember. And the quotation is, "It's never too late to be the person we might have been." And it's by George Eliot. So whether you're young or old, it's never too late, is quite simply the summary there. So it wasn't too late for me, and it's not too late for you either. And if you're young, well, that's great news. I had my 18-year-old nephew Facebook messaging me the other day, and he said, I want to be successful. And he was actually, he was going to be hoodwinked probably into some dodgy, scammy trade deal where someone was trying to get him to send some money over before the end of the day. And he was asking my advice, and I was obviously trying to make sure he didn't fall into any traps in doing that. But so he said, I want to be successful. I said, I'm sure you will. I am sure that you will, but you don't have to be successful by midnight tonight. You have time on your side. So whether you're young or old, there is time, but no worries with that. But it's let's take a leaf out of Stephen Covey's book, The 7 Habits of Highly Effective People, one of my favorites, in fact. And he said, first things first. And the first thing I think we should say is stop. Just like I spoke to with my nephew, stop. Don't rush to invest in anything right now. We need to prepare ourselves before we do anything else. And there's several ways we can do it. And this is my recommendation or my suggestion of how we can do things. And keeping Stephen Covey close in my thoughts he also said, begin with the end in mind. So beginning with the end in mind, I think the best way for me to start this is to talk what I talk about my one-page business plan, which is aimed to plug the gap to goal. And it's a post it's a blog post rather that's inspired this, and really just to kind of really focus in on a single page business plan, because these business plans can be so complicated, and they don't need to be really. So in headline terms, what does a business plan constitute? Well, it starts with the purpose or the reason why. Why do we want to invest in property? Why do we want to invest in anything? Potentially it's to replace an income, to plug a hole in the pension, which is probably what started it for me, to help other people, have a better lifestyle, and so on. So, everyone's going to have their own different reason why or purpose. But I think it's important to identify what that is. It could be a short-term aim, it could be a long-term aim, and of course that's going to have a bearing on what we do next. Then we need a top-line goal. And people talk about goals in different timelines. If nothing else, we should have a 12-month goal, but potentially a 3 or 5 year goal. But let's just say in this business plan, there'll be a top-line goal, and it's going to be for 12 months. And that's the what, if you like. What do we want to achieve in the next 12 months? Next, we need to determine our primary and secondary strategies. I would suggest no more if we're just starting out. Have a primary strategy, maybe a secondary one, a backup one, but probably no more than that. And the strategies, of course, are the how. So very quickly, we've covered the why, the what, and the how. And it probably doesn't take too much thinking to figure that out. So not only is it the one-page business plan, but it's probably more like the 30-minute business plan as well. So that's also good news. The next stage, of course, is to set KPIs. So this is a different type of KPIs to what I mentioned under the criteria and checklists section. These are milestones, if you like, breaking down the 12-month goal into regular milestones. And this could be daily or weekly actions that we would need to take that would ensure ultimately that we'd hit our desired result. So if we want to hit an income goal, for example, over the course of the year, we need to know how many properties. In order to know how many properties, we need to know how many offers we need to make on properties. In order to know how many offers we're going to have accepted on properties, we need to view a certain number, and we can work back, if you like, reverse engineer, for want of a better description, to plug the gap to goal, which is where the term came from. And then what we should have in place is a regular, what I call plan, do, review cycle. And this is really just that we have weekly, monthly and quarterly check-ins, progress check-ins, checkpoints, if you like, along the way, so that we can review our progress and course correct where we potentially up our activity level, or if we're on course or ahead of schedule, we perhaps even up the goal. But it's important to check in so that we know how we're doing. We don't just get to the end of the year and go, oh dear. So it's to help us stay focused and to stay on track. The next thing really is celebrate success. And this is really important. When I probably covered this in a previous episode, it's an area I personally struggled with for many years, but now I kind of get it. And it's a case of rewarding ourselves for some of the small as well as the big wins, and just to pause and reflect and enjoy the moment. It doesn't have to be a big celebration, but just something that rewards us. And ideally, something memorable or long-lasting is the best thing. And then the final part of this one-page business plan, so we whistle through this, and it shouldn't take too long, as I'm sure that you're understanding by now. I like to say give back, because nobody probably does anything on their own. And, just like I had help and support along my journey, I'm sure you will as well. And so this whole principle of reciprocity, giving and receiving, and not just taking all the time. So I would suggest be generous with your time and or knowledge and or money and or anything else really, for that matter, because the more you give, the more you receive, and the better it is for everyone. And that's just a personal philosophy which overall is just going to be for everybody's overall benefit. So I know not everybody will see that immediately, but it is a success principle, and it's just good for the universe and everyone within it. So that's it. That's the one-page business plan, and it's probably, as I say, the 30-minute business plan as well. So quick start is what I said, and hopefully that will help to achieve that. So whilst that's very action focused, if you like, so the plan, do, review, cycle, and the goals and all of that good stuff, there's other things that can happen along the way. And this goes back to something I was talking about last week with the habits, etc. So we all, taking another leaf out of Covey's book, sharpen the saw, as he calls it. And that's basically to stay educated. With knowledge acquisition, and also from that be formal knowledge acquisition, perhaps reading and online learning and this sort of thing, and maybe even training. But it could also be through community and networking, where we get to learn through other people's experiences. So we really don't have to do this on our own. In fact, that's a major point I really want to emphasize. When I started, I really was alone, and probably my progress wasn't as quick or as fast fundamentally as it might have been. Which brings me to my next point, which is all about accountability and support. So accountability and support is, two sides of the same coin. Accountability, of course, is holding ourselves accountable or allowing ourselves to be held accountable by somebody else. It's the kick up the backside, whereas the support side of it is the arm around the shoulder. So, sometimes we need the arm around the shoulder, and sometimes we need the kick up the backside. So, very simply, 3 things that we could consider in that respect. One that would be to what I call get a buddy. So just partner up with somebody, perhaps local, perhaps a family member who's got a keen interest in this, or a friend, just someone to share experiences with, really. It could be just someone you meet at a networking meeting. The second option potentially is to either join or form a mastermind group. And it was Napoleon Hill, I think, way back, I think it was in 1920s, 1930s, or around about then when he wrote his book. Might have been later when he wrote it, but he certainly formulated it back then. When he talked about, the power of a mastermind, when 2 minds come together, there's a greater force that produces better results. So a mastermind group to meet regularly and share ideas and pool knowledge and make progress. So that's the second step. And the third one might be to get a mentor. And we talked about this in the past. Mentors can come in various guises. You can have more than one mentor. You can have difference between a coach and a mentor. I think I've explained the differences. I'm happy to do so if anyone wants to discuss that. But progress can be a lot faster if we have any one of these, actually. So I'm not, precious about which one, but I would suggest at least one, maybe all 3, but certainly at least one. And then I guess after all of this is said and done, we've got a lot of planning in there, we've got a lot of knowledge acquisition there, and we've even got a little bit of support and accountability going on. The other thing, of course, is we need to take action. There is no point procrastinating and knowing everything about property investment if we just don't do anything about it and don't invest in property. So with the best plan and the best learning and the best pals to meet and talk property with down the pub, it really doesn't matter unless we do something. So it can be a bit scary and a bit daunting. Quote another book title, Feel the Fear and Do It Anyway, by Susan Jeffers. And so I suggest just getting out there. And I think as I've heard recently, a few quotations about failing fast, make mistakes and fail fast, because the quicker we make the mistakes, the quicker we fail, the faster actually we achieve the result that we wanted to. So, bottom line is don't worry about it, and have some fun along the way. I mean, we don't have to take things too seriously. If we mess up, it doesn't really matter so much, does it? So there we go. So I know I've rattled through that, but I think it is a case of having this quick start mentality, getting going. We can always refine the plan later on. We can always, get better, get smarter as we go. So hopefully that is useful. And I really wanted to have it just touch on quickly my own particular story. I probably drafted a few more notes that I'm going to share with you now, but essentially I only a few years ago now, 6 years ago it was. I was in a pretty bleak position when I had my eureka moment, as I probably mentioned to you before, where I kind of really understood the power of compound growth and leverage as far as property investing was concerned, and I kind of got it. But it was a while after that before I was able to get back in again and seriously invest in property, and not least of which because I was in a tough place actually. I went for a divorce. I was renting. I had very much a shortage of income each month, a lot of debt, a big hole in my pension. You probably heard the story. So it wasn't the best start. It wasn't the best starting position. But I managed to turn that around. And, I think a lot of the principles that I'm sharing with you are born out of that experience. So it is very much an experience-based journey. It's not a classroom-based or theoretical-based teaching principle that I've been sharing with you over the course of this series. It's born out of personal experience. It's a turnaround. I think to some extent I'm kind of a bit of a turnaround specialist in many factors of my life. But needless to say, it's not about that. It's just a case of just saying, if I can do it, then you can do it too. And so I just wanted to give that story, just a reminder of that story, if you like, that in a position now without boasting or anything. It's just that I don't have a hole in my pension anymore. I've got double-digit property portfolio in 3 countries and a 6-figure annual rent roll. I've got experience now in a variety of different investment strategies, and most important thing of all is I've got the ability to do what I enjoy most of the time. And what I enjoy most of the time is supporting others. So that's why I do this podcast. That's why I have a blog. That's why I wrote a book. That's why I do mentoring and training. These are the reasons why I do these things. It's what gives me inspiration. But I've put myself in a position where I can do that now. So it's given me choice, I guess, is what I'm really trying to say. And so, bottom line is, it's not about me, as I mentioned. It's about you. So what is it you'd like to achieve in property? What are your goals? What are your aspirations? What do you need help with? So, which actually brings me on to the next point, is effectively, how can we help, and how can we help at the Property Voice? And of course, we've got the Property Voice website itself, and that's got a lot of resources, news and blogs and sample projects with some real numbers and all that sort of stuff. Of course, there's my book, The Property Investor Toolkit. This podcast, don't intend to stop. I intend to carry on. Hopefully that's okay with you and you haven't switched off or deleted it from your podcast downloads. Stick with me here. But equally, the Property Voice can help with, I touched on it just now, with mentoring and training and indeed joint ventures. So if you think that you like what we share here and what I speak about, what I stand for, I've shared a lot of my values, my principles, I've shared a lot of my story and that kind of thing. I partner with other people, Damien Fogg principally, to deliver mentoring, and so we have a unique take, this 2-for-1 mentoring approach. For example, we've got training programs in the offing, and we're working with in joint ventures with people who've just come to us and said, well, can we work with you and learn looking over your shoulder and that type of thing. So anyway, I won't dwell on it, but that's how we can help. So the best way probably is to join our mailing list over at the website, thepropertyvoice.net. And then you can stay in touch with us, or just drop us a line, start a conversation. It'd be great to hear from you. But I didn't want to leave this first series without giving something back. Always trying to talk about giving back. And here's another example, perhaps. And so to reward you as a listener of this podcast who's made it through this first series, and indeed has made it through this final episode of this first series, I'd like to make you an offer, and that is to give you something of genuine value. And normally what I'm about to propose would have at least a ticket price of around about £200. And it's what I call a mini strategy review. And so all you need to do is drop us a note to podcast@thepropertyvoice.net, an email obviously, with the subject line mini strategy review. Put your full name in the body of the email. Be nice to hear a little bit about you, but that's all you actually need to do. And what we'll do in return is we'll walk you through a 3-step process which will help you get going with your property journey. And that involves a desktop strategy review that looks at your goals, your current position, your strengths and your lifestyle factors. And what we'll be able to do is to give you a couple of pointers for some ideal strategy matches and something of a personal assessment from us. So that's something to give back to you. So please make a note of that. It does take some time on our part to do that. It's not very formulaic. We try and personalize everything. We'd like to give that to you as a thank you and to show genuine added value to what we do. So we can't really say fairer than that, can we? So do get in touch, and we look forward to hearing from you. But right now, it's Kaza again with Your Voice.
Up next is Your Voice. It's all about you and your property world.
Okay, to Your Voice. Today we would like to share a 5-star review of the podcast. It comes from JHJ1122, who says, "Brilliant. 5 stars. A great, informative podcast. Really enjoyed and very helpful. Thanks, Richard. I just thought I would take this opportunity to say, thanks for a great first series, Richard. I have enjoyed our time working together very much. I am looking forward to our next series with eager anticipation. Something to do with the circle of life, isn't it? Back to you, Richard, for the shout out."
And now, where you can go for more great resources with the shout out.
Oh, Kaz, that's very nice of you to say, and I've really enjoyed working with you as well. Even if you do have a slightly dodgy sense of humour, I have to say. You're not still there, are you? No, that's good. Well, I'm not so sure that we're going to be looking at The Lion King and the Circle of Life. You're really, struggling to read my notes, aren't you, today? But in this next series, but perhaps you've had a bit of a garbage in, garbage out moment with your data input. Who knows? But hold fire for a quick minute, and as soon as I've shared this week's shout out, I shall reveal what we'll be covering in series 2. Okay, so this week's shout out, it's another web resource, and one that allows us to benchmark estate agent performance, and it's based on real data. So it's from an organization called estateagentforme.co.uk. So it's estate agent, the number 4, me.co.uk. Obviously, excuse me. The links will be in the show notes, so by all means head over to there and you'll see it. But essentially all we need to do is plug in a postcode of the area that we'd like to sell a property in, and the search engine behind it will generate all the agents available in the area and their performance. And it looks at their success rate, the average time to sell a property, how close they actually get to the asking price. That's very significant, and helps you determine potentially the ones who are just bidding up the price to get the business against the more authentic ones. Number of properties the agent has listed in that area, and indeed the fees that the estate agent charges. So really useful resource. Now, you might think, well, Richard, I'm buying and holding, I'm not selling property. Maybe I sell my own house occasionally, so it's not a great resource. And initially I was thinking, well, perhaps it is a resource. It's only aimed at property traders, flipping property and that sort of thing. But actually I realized we could probably reverse engineer this and look at also the bad agents, couldn't we? And target those who've got poor success and maybe heavy discounts from advertised prices and this sort of thing. I'm not saying that advertised price is market price, but we can just think creatively and maybe how we can use it as another tool to target potential opportunities. So there we have it. It's estate agent for me, and it's performance data that allows us to benchmark different estate agents. But what would be really great, of course, is to have the equivalent for letting agents as well. And I'd really like to have that as a tool. So if you're listening, estate agents for me, maybe there's a letting agents for me equivalent that we should have as well. Now, I am aware that Zoopla have similar comparison tools, but they're not by any means to the same level of granularity or detail as this one I've just mentioned, which is why I've given this one a shout out. But there is some data that you can find for both estate agents and letting agents also on Zoopla. So that's it for another week on the podcast, and in fact it pretty much wraps up the first series from the Property Voice podcast. Now I've got a couple more series lined up. So I'm not going to be disappearing anytime soon. I'm going to start looking at property life cycles, which is what Kaza was probably trying to say all along throughout this episode in the next series. But life cycles can come up, can mean different things. Whether it's the soup to nuts if you're American orientated, or cradle to grave if you prefer this side of the water. Stages of a single property investment, right from buying to either refinancing, ultimately selling on. But equally, a life cycle could be these longer term market cycles. So we're going to dip into that a little bit. And similarly, the term of life cycle could be applied to a whole portfolio, or our entire investment portfolio life cycle. So there's 3 dimensions, if you like, to this whole concept of life cycle. And I think it's going to set it up into quite a nice series. It's going to look at different aspects, obviously from an individual property to whole market cycle to our whole investment approach. So that's going to break down into a number of different episodes. So that's what we've got coming up for you over the next series. Not sure how many episodes it's going to be right now, but and I've got something planned after that. I think I might have alluded to it before, but we're going to have a deeper dive into probably strategy, probably financing. So depending on which ones you probably prefer me to lead with, I'm sure we could go with. So lots to get our teeth into. So needless to say, all of this is on the show notes over at the website, thepropertyvoice.net. All the links and the references are going to be there. And don't forget the podcast listener loyalty offer of that mini strategy review, will you? Just drop us a note, podcast at thepropertyvoice.net with that subject line mini strategy review, and we can just take it from there. We'll start a conversation and we'll take it from there. But needless to say, that's all from me. Thank you very much for listening to what was our first or maiden podcast series. Really hope you've enjoyed it. We've definitely enjoyed having you with us. We've seen the audience figures growing week by week, so the word is getting out there, but help us to spread the word. I'd be very grateful. But for now, and until the next time on the Property Voice podcast, ciao ciao.
Ciao ciao.
Thank you for listening today. Now head over to thepropertyvoice.net for more inspirational content and get updates through our mailing list. Join us next time on the Property Voice podcast. And if you enjoyed the show, please don't forget to rate us on iTunes.